Very good afternoon, good morning. Welcome to the online trading webinar with myself, Giles Cochran. Hello, Carolyn. Good morning to you. Good afternoon, rather. Osho, afternoon. Odair, Hassan, Ryan, good to see you. Right. Well, we have had a weak PPI print, so this sets the stage very nicely for tomorrow's CPI. Just taking a look here, what we've seen is the PPI, which tracks the CPI. This is the prices that producers pay, and as sure as eggs is eggs, when producers are paying lower prices, eventually that moves on to the consumer. So a weak inflationary print is excellent news and means that the Fed is much more likely to cut interest rates moving forward. So it's come in below market's minimum expectations. So it's a decent print. We've seen immediate upside in equity markets on the back of that. We take a look at short-term interest rate market pricing. We can see a shift in pricing as well, with expectations that the Fed are going to cut up. In betting markets, it's gone up to 20%. Here in short-term interest rate markets, it's still sort of staying at sort of 8%, so slightly increased chances of a 50 basis point rate cut, not massively, but nevertheless, there is an increase. And you can see that the current interest rate expectations has fallen, right? We have seen upside in equity markets as a result of that. So that does give us a bias for upside in equity markets and a bias for dollar weakness, and risk is sort of positive at the moment on the back of this. Now, taking a look at markets, you can see equity markets higher, volatility pushing lower. You've got bond markets being bid on that PPI print, means the Fed's more likely to cut interest rates. Gold naturally lifted, silver naturally lifted, commodities naturally pushed up on that weaker dollar. And although we've been seeing some dollar strength yesterday, right, this is more a bias for dollar weakness, and you've seen the sort of choppy action in the dollar. The main event is going to be the CPI tomorrow, but this does set the mood for a lower print, and it's positive for equity markets at the moment. Will of course be moved by order flow because there's a number of different drivers out there at the moment, and there's a lot of geopolitical risk going on with Russian drones falling over Poland, and the prospect of a NATO member being triggered into a conflict is always going to keep markets risk averse. But nevertheless, the PPI print is positive. You can see Aussie, New Zealand dollar currencies pushed to the upside, and the general sort of outlook is that's positive for risk. That nice bit into the bond market, expectations changing. Now, I did see here that betting markets are looking at a 20% chance for 50 basis point rate cut. Even though we're not seeing that in the short-term interest rate market. So there probably will be some different views on that. Let's just check. Yeah, I'm just checking the squawk is on. Right, so yeah, that's the main driver there. Got the open coming up in 24 minutes. Let's have a look at any big news to look up. Yeah, PPI is the main data point. We've got the EIA crude release coming up at 3. The other big news in stocks is Oracle's up 30%. That's based on their cloud projections. So there's a nice big move that's expected in Oracle. 30% up in pre-market still to open. So, you know, any breakout trading in Oracle would make sense. Definitely something to keep an eye on. Looking at equity markets, you see the ES has pushed up straight away higher on that news. Looking at the hourly chart, you can see that inventory, right, is positive, pushing sharply higher, making record highs. The 15-minute chart showing sellers trapped all the way down there. We've pulled back to this first standard deviation, so it is suitable for buying off this first standard deviation if we see anyone trapped off that level. So just seeing here, sellers testing the resolve of buyers against that first standard deviation. And, you know, if we do see sellers getting trapped here, then that would be a trigger for further long. So I am long this market, just stops underneath the standard deviation, looking to see if we get some support here off that first standard deviation and see if we can move up higher into the open. So that's what I'm positioning for. Just sort of building into positions as sellers got trapped based on this weak PPI print. So we'll see. I'm expecting some buying opportunities here, but we will be led by the order flow as we go forward. This is a nice little area we're just at with this first standard deviation test. Be interesting to see if we get some sellers trapped against there. There's a low risk, high reward entry on any sellers getting trapped against this first standard deviation here.
Just got a post here from your
just underneath the low here.
Social says.
Oh, that's great. Yeah, that's great. Okay. Folks, right, let's quickly get ready. So this is interesting here. Nice little open we got. So looking at the hourly, delta positive, breaking above those sellers. So market is clearly imbalanced, trending higher. You can see we're opening up above yesterday's value area and above yesterday's entire range. We've had this very weak PPI print, which increases the chances of Fed interest rate cuts. Now, let's just check that's the current pricing. I'm going to give this a quick refresh. All right, so betting market's got it at like nearly 20%. Short-term interest rate market's 8%. The big sort of thing that's being bandied around is how close to 3% interest rates going to be in 2026 with the Fed's dot plot. We've got the market about to open. Got 2 minutes. Okay, so that's, you're just going to expect buying off this level. So if you look on the 15, these buyers are still here. On the 5, these buyers here and here have trapped those sellers. So you're looking for buyers off this standard deviation again, right? That's the trade. So here we come into it. Right. So we're looking for buyers against this level. I'll read the buy at market if we go above the 6556 at the open. So here we go. 22 seconds. Look for buyers to come in and trap these sellers. That'll be really interesting. Okay, 3 seconds. Here we go. Watch for buyers here. Watch them to come in. Still waiting for buyers against the VWAP now. There they are. So they're in. Those buyers have trapped those sellers there. So let's see if we get a bit of support here. Right, I'm going to put a sell underneath that level. Okay, here they come. There should be the buyers here. They're trying to come in now. Okay, here we go. VWAP's holding just, so I'm still holding in here. Okay, some sellers trying to come in. Okay, VWAP still holding. Trying to break out that range. Can push above there, can add another one. All right, expect buyers to add in here if they get a close above here. Okay. Okay, I'll take profit up against that standard deviation if I can hit it. Okay, just taking profit against the standard deviation. Okay, that's fine. Okay, so
remarks from the Polish Foreign Minister, they say the PM Tusk has asked for stronger air defense for Poland.
Okay, so that was nice. So now those 5-minute buys are trapped up there. So just got to be careful here that you don't get a pullback. So it makes sense to take profit there. And now let's see where we go. If you just look at the structure, you see you've had to drop at the open, pullback, sell off. That kind of all makes sense. Now, buying from that VWAP made sense here, as we bought in when buyers trapped sellers here. Right, so that was absolutely fine. That made sense.